Welcome to Finance Deep Dive. Today we're tackling a question that's really at the heart of the U.S. economy. Are we actually in the middle of a huge productivity boom? Or is it all just, a statistical illusion?
And look, this is way more than just some academic debate. The answer has massive implications for pretty much everything, from the money in your paycheck to the entire country's economic future.
So, for the better part of a decade, U.S. productivity growth was, it was stuck in the slow lane. But all of a sudden, the numbers have shot up, and it's kicked off this massive debate. Before we really get into that, let's make sure we're on the same page. Productivity is, at its core, just the value we produce for every single hour we work. You can think of it as the real engine of our economy. It's what drives wage growth, and at the end of the day, makes our standard of living better.
Okay, so let's start with the optimistic take, the bull case. Could we be seeing a real deep structural shift that could power our economy for years and years to come?
The argument for a genuine boom, it really boils down to the three key drivers you're seeing right here. Basically, how we work, the tech we're using, and the rise of AI. First up, automation. Companies are just pouring money into new technologies. This allows them to make more stuff, sell more stuff, and serve more customers. And a lot of times, they do it without even adding to their headcount. It's really all about doing more with less. Second, the pandemic. It was a kind of forced reset, right? It pushed companies to slash all these little inefficiencies, to streamline their operations, and to get incredibly smart about how they function in this new world of remote and hybrid work.
And third, and this is the one everybody's talking about, AI. This isn't just hype anymore. These new artificial intelligence tools are already making a tangible impact, totally supercharging industries from software development all the way to supply chain management. Now, what's so fascinating about all this is that we've seen this movie before. The huge surge in computerization back in the late 90s, it created a really similar jump in productivity, which, it gives a lot of weight to the idea that this is a real, genuine technological moment.
But what if this incredible story is just that, a story? Let's flip the coin and take a look at the case for this whole boom being nothing more than a mirage.
So the skeptic's view is that this isn't a permanent change at all. Instead, it's a kind of statistical illusion. The argument goes that recent layoffs and much slower hiring have just skewed the math, making it look like each worker is more productive, when in reality, it's just a strange side effect of a very weird labor market.
And this quote really gets to the core fear of the skeptics. What happens when hiring picks back up again? Are all these productivity gains just going to vanish into thin air? It would kind of prove the foundation was a lot weaker than we thought.
On top of all that, we have to remember that these numbers themselves, they're not set in stone. Productivity data gets revised constantly, so what looks like a boom today might look completely different a year from now.
Which brings us to the biggest variable in this entire equation, the one everyone is betting on: AI.
History shows us that even revolutionary technologies take years, sometimes decades, to really make a dent in economy-wide productivity. It took a long time for businesses to figure out how to best use things like electricity and the internet. And it's very likely we're in that same early, kind of awkward phase with AI right now. And here's the bottom line for most of us, right? A real boom should mean higher wages. But so far, those gains have been pretty patchy and uneven, which really makes you question just how deep and how sustainable this trend actually is.
So, where does that leave us? With really strong arguments on both sides, the evidence seems to point to a more nuanced, kind of middle ground conclusion.
So the truth, as it so often is, isn't a simple boom or mirage. It's actually a pretty messy, complex mix of both. Think of it like this. There are absolutely real structural changes happening. That's the bigger part of the story. But a pretty significant chunk is also being driven by those temporary, cyclical forces that could just fade away over time. So what's it going to take to turn this moment into a lasting boom? Well, it's not a given. It really depends on continued investment in tech, on truly smart and widespread AI integration, and maybe most importantly, making sure the workforce has the right skills to keep up with it all. And that leaves us with the big question. The potential for a brand new era of prosperity is real, no doubt about it. But turning that potential into reality, well, that's the challenge that lies ahead. Is this going to be a true renaissance or just a temporary rebound? The next few years are going to tell the story. If you want to keep exploring critical questions just like this one, make sure you subscribe to Finance Deep Dive. Thanks for watching this video.